Bitcoin is consolidating right here in this formation, and we are most likely going to see a breakout out of this formation before this date. And guys, in today's video I'm going to show you exactly what I'm expecting with Bitcoin, which targets I'm going to look at when we are breaking out to the upside, which targets we are going to look at when we are breaking out to the downside. And I want to have a talk about the regular financial markets and some derivatives exchange data, which I think is right now showing us a very interesting profile. So guys, drop a thumbs up, let's dive straight into it. And yeah, right now we are looking at Bitcoin on the daily time frame, and if we are going to the 4-hour time frame, the pattern is getting a little bit more visible, and it looks like we could be forming a ascending triangle. An ascending triangle is basically a triangle formation with a horizontal resistance and a uptrending support. And the nice thing about this pattern is that this is generally already a bullish pattern, right? And a bullish pattern, or any pattern, can also function as a continuation pattern. So that means that we have an uptrend pattern, bull flag, symmetrical triangle, normal triangle, ascending triangle, whatever, and then we have a continuation of that trend. We often see that this is a higher likelihood when we have basically any pattern, the way or the trend that we enter that pattern in, it has a higher likelihood to continue when we finish that pattern, right? There is always less likelihood for a reversal, but with this pattern it even brings another likelihood to the upside because it is a bullish structure as well, a ascending triangle with a horizontal resistance and an uptrend in support. And technically, guys, if we were to measure the targets of this triangle formation, technically this target would be, if we break out to the upside, that would be roughly at 36,300. And if we were to break out to the downside, depending on where we break, the target would be at 32,700. But I'm going to expand these targets a little bit with important levels right now in Bitcoin. So for that, we go back to the daily time frame. And let me set this one on auto fits right here. And zoom out a little bit. First thing I want to do, guys, is I want to bring out the Fibonacci retracement tool right here. From the bottom till the top, you can see that we basically trade below the between the 50% and the 61.80%. So it would really make sense from a structure roll view right here that we are going to touch the 61.80%, which is at 38,500. So therefore I'm also going to say, if Bitcoin can decisively break out to the upside, we might see a rally to 38,500 and touch that 61.80%. Hey, maybe even overshoot it, go to 40,000 US dollars. That is definitely possible, and also fits in this time period of the 16-year cycle, which I will be talking about later in this video, which is also a very important thing that everyone should realize, at least based on the 16-year cycle. So that is the upside target. Now, what is the downside target? Well, for the downside, we're going back to the 4-hour time frame, and we are going to zoom a little bit more into the Bitcoin price. Then we can see that we basically have this massive rally in Bitcoin, right? And we have a very important support level right here, which is roughly at 30,000 US dollars, but also we have a support level right here, and that one is even more important, the previous high right here at 31,500. Let's say 31,500, can be a little bit below that. If we break down, then it is quite likely that we are going to test this level sooner or later, and this level definitely needs to hold in order to turn bullish. If we do break down, we of course go to the next level, but the lower the levels that we are going to touch, the more bearish it would basically look. But for now, things are still looking rather bullish. But there is a big but, which, like I said, I will come to the end of this video. Let's have a look at the derivatives exchange data. The picture that we are seeing right here on derivatives exchange data is very unique, guys. Is something that in a normal market, in a sideways market, or in a bear market, these signals are very, very, very bearish. And what we are seeing is we have an increase in funding rates. Funding rates are positive. Most people are longing right now. Open interest is going up while funding is positive, which basically means that a lot of people are in long positions right now, and the open interest is high. It's pretty high, as you can see, compared to the past couple of weeks. We can see that the premium just turned positive already for some time. That is also bearish, and the cumulative volume delta, which is something we just added to our website, also showing this divergence with the price moving sideways and the cumulative volume delta going down. So in general market conditions, this would be a very bearish derivatives exchange data profile, because positive funding, bearish. Open interest with positive funding basically gives more volume to that funding rate, so it makes it even more bearish. Positive premium is bearish because it means that the price is being led by futures, not by spot. Cumulative volume delta going down, which basically means that while price is going sideways, volume is going down in comparison to previous volumes, which generally is a bearish sign. But, and here comes the big but, if Bitcoin is in that acceleration phase, if Bitcoin is in the bull market, then Bitcoin can ignore these warning signs, and we are seeing this so often that in a certain stage of a bull market, everyone is saying yes, but we're seeing bearish divergences, right? Like bearish divergences is one of the first signs you see from a trend change, but then Bitcoin just continues to shoot up. I can show you one example of this. Do we have the relative strength index right here? Let me bring it up, guys. Relative strength index, and I will bring you to 2019 when Bitcoin went on a very strong rally. And let me scroll back right here. Yeah. So here we can see Bitcoin going on a very strong rally, right? We had right here bearish divergence. Okay, we had a small drop, but yeah, quite quickly we got back into the same levels. Here we have bearish divergence. Price goes up. Bearish divergence. Price has a slight correction, then goes up again. Here we also have bearish divergence. Yeah, okay, we do get somewhat of a pullback eventually, but price coming back up quite quick again. So as you know, I hope you get what I'm seeing, guys, is that this is just a profile where you can see a lot of bearish divergences also on shorter time frames. Guys, this is an example of how people get generally bearish in a bull trend because of bearish divergences. And I'm not saying that right now we are 100% in a bull market. I'm not claiming that, because I think it is still very difficult to say, because Bitcoin has been decoupling from the S&P 500, something we have never seen before. So the market conditions that we are seeing right now is something we have really never seen before. And that is also the crazy part, and that makes it even harder to analyze this, because we don't really have historical data to compare this with, right? If we would compare it to historical data, then it would be rather more bearish, because sooner or later Bitcoin is correlated with the regular financial markets. So that is also something I want to say. So the derivatives exchange data profile is looking bearish. Bitcoin is in a very strong uptrend. I think the structure goes above the data, right? So the structure right now is up, the trend is up. But if we do break down, guys, you want to catch this one early. You definitely want to catch this one early. The resistance right now is at 34,800, and the support right now is at this low at roughly 34,000 US dollars. Then, guys, we go to the regular financial markets. The regular financial markets have seen already quite a big correction. Right now it is gapping up from a support. This support I've been already mentioning yesterday and the day before, that most likely we will get a bounce right here. It would really make sense, right? After such a long bleed, going into that support zone, even get a bullish divergence right here on the 4-hour, higher low on the relative strength index, low low on the price. This definitely shows like it wants to bounce. But it doesn't mean that this is going to be a new uptrend. I would say it's more likely that we are going to do something like this, right? Where we have from the top to the bottom, maybe go exactly to the 61.80%. Guys, that's kind of crazy. If you like to trade the S&P 500, if you like to short this stock, using US dollar Tether, you can do that over on the BingX exchange. BingX is a exchange that just partnered with us, and yeah, right now you can get a bonus up to 9,600 US dollars depending on your deposit and trading volume. But also you don't need KYC on this exchange, and you can trade indices like the S&P 500 if you are interested in shorting this pair. So this definitely looks interesting, guys, because we also have some former support and resistance coming in right there. So it would really make sense for the S&P 500 to bounce at the levels where we are right now, form a lower high, and eventually break this low. We also have a gap, so that gap most likely will be filled as well. What will mean this for Bitcoin? And I think this bounce in this risk on asset, the regular financial markets, might spark that breakout to the upside in Bitcoin too, and that we pick up that correlation a little bit again, and that Bitcoin and the regular financial markets maybe can get that push, can get that push higher, that Halloween effect that often November, December is maybe a little bit more bullish, people buying the stocks after Halloween, going a little bit into risk on also after such a bleed. I would definitely see that as a possibility. But still, like I said, we have to be slightly cautious of the macro situation right here, but also of the micro situation right here. And something that I want to share with you guys here as well is that we have been talking already since the beginning of this year about that 16-year cycle. The 16-year cycle, you have to watch a separate video about that. I will put it in the information box right here. But that basically explains the last cycle that we are in right now, which is a very short acceleration, short bull market, followed by a very long bear market. And that's the exact same thing that the dot-com bubble also did with the internet companies, basically. So that would mean, guys, that we actually could already top for the bull market by the end of this year. That is, of course, in one of the most earliest scenarios, but it is possible. And imagine how much people will be left on the sidelines and how much people will be confused, because I'm seeing on the internet everyone thinks we are just starting the 4-year cycle, and everyone is talking about the halving event and how Bitcoin is really going to accelerate after the halving. I've said it already so many times. Even a year ago, the next halving is not going to be bullish for Bitcoin. The market supply of Bitcoin, the active Bitcoin in the markets, is already so high that the pressure of miners selling their Bitcoin is already super low, and the price is not depending on the pressure of the miners. So the newly created Bitcoin into the system is already super low with the existing Bitcoin. So this will have a less and less impact. But it's more that the narrative will have an impact. Wow, the halving, cut in supply, even more deflation, right? Even less Bitcoin available, price should go up, right? But maybe this is the biggest trap. Maybe we are going to see that short-term top, and maybe when we do see a short-term top, it might not be that high as we expected. But this is something that we already have been talking about during the past year, because I've been preparing you guys. This also is, these highs are definitely, they are higher highs, but they are shrinking in terms of gains. Right, and especially when you take the M2 money supply into consideration, because if you divide this chart by the M2 money supply, Bitcoin just stopped right here, maybe at 30, maybe 40,000 US dollars. It's because of inflation that we went to 70k, and that's also why it looks like we had a full-blown bull market. But in terms of purchasing power, you didn't gain that much. You definitely gained, but not like the 70,000 right here was not 70,000 right here, because the dollar supply during this period has been increased by 1/3 or maybe 50%. I don't know the exact number, don't quote me on that, but this is a huge amount that also kicked off the whole bull market. And most likely some quantitative easing, some new money printing will happening soon as well, as the regular financial markets are coming down. Right? The Federal Reserve actually kind of wait for this thing to come down. Because when this thing come down, he has a proof, he has a evidence. Okay, right now we have done enough interest rate hikes, right? The economy is already slowing down. Okay, but it has to crash. There has to be a real problem that in the news everyone starts to complain. Yeah, what about this and that, and we can't do this and that, and then suddenly the angel steps in, the Federal Reserve, printing money, distributed in the economy, and then things will catch up again. That's the playbook that we have been seeing for the past decades, and that's the playbook that we are going to see also in the future. And that's also, guys, why I've already been saying when we were trading right here, we need to have a somewhat of a crisis to enter that new bull market, because we need that money printing. But that's also really the mindset from the previous bull market, because it is so interesting that Bitcoin right now just pumps up while with gold, hedging assets, while the regular financial markets are going down with the instability that we are seeing in the world. It's a crazy time, but I want to remain grounded and alert, because we are being fooled all the time. We are being fooled all the time by people like Jamie Dimon, by people like BlackRock. We are being played. So that's why I'm not going to lean into any other situation for the full 100%. I'm going to expect some certain scenarios that I'm sharing right here in the videos, but I'm also going to be very alert as we are entering new waters right here, and anything can happen. And I will be open to anything. Another thing that actually confirms the S&P is going to bounce is the higher high in the fix, lower high in the relative strength index. Most likely this will be coming down. This has an inverse correlation with the S&P 500. So when this thing is coming down, most likely the S&P 500 will go up. Guys, that was it for today's video. I hope you all enjoyed it. If so, if you enjoyed this video, share it on Telegram groups, share it around with your friends, drop a thumbs up, very much appreciated. Drop a comment, let me know what your plan is for today. Let me know what your plan is on the regular financial markets. I always love to read your comments during the day when you guys are watching the videos. For the traders under us, if you want to join Will Alerts, the private Telegram channel where you will receive extra information on the cryptocurrency markets. And right now we are preparing for a big trade over on there, a big thing that is happening in the next months, of course, which is very, very interesting. Make sure to join for free by being an active trader on one of these exchanges that we are recommending down below this video. We have Bybit first. Bybit is definitely the best exchange, but it has some things like you have to have a KYC. Not everybody wants that. So therefore you can do BingX. BingX is also a very good exchange. I would prefer Bybit over BingX, right? But I would also say you shouldn't use only Bybit. So you should diversify in multiple exchanges so you can always move funds whenever necessary. Because Bybit has KYC. If something happens with regulations and Bybit has to go down in your country, you directly have an alternative already ready. That's very important. And as third, we have BitGet. And on Bybit, you can get a bonus up to $30,000 US. On BingX, the bonus can be up to 9,600. And on BitGet, you also can get an additional bonus. Guys, for the ones interested, you can find the affiliate link down below. Also, if you want to join the free Telegram channel, we also have that where we publish the videos, sometimes an updates, stuff like that. Make sure to join that as well with the link down below. Guys, I want to wish all of you a beautiful day today, and I hope to see every single one of you in the next video.